When I think about hedge funds and the investment environment, in the near term, year to date, performance has been strong. Business models have been shown to be resilient, and the trends that the virus has unleashed have created a much more fertile environment for underlying managers. When we ask hedge fund managers, to them it is challenging as it has been, a welcome change from the quiet and somewhat undifferentiated markets that occurred in the lead up to this. So within technology, and I think we've all felt this, the quarantines have pushed the adoption of many of the technologies that were already out there into hyperdrive. On the healthcare side, 60% of global healthcare is attributable to governments. On the corporate credit side, companies, after 10 years of relative stability, went into this crisis with, in many cases, over-levered balance sheets and razor-thin margins. Out of the $11 trillion worth of US non-financial corporate credit, a significant portion has traded at distressed levels despite government programs directed at calming the market. Now, within that, as furlough programs roll off and as the appetite of governments to continue that support diminishes, we foresee a longer-term distressed and restructuring cycle taking place. With respect to China, I think it does come out of this pandemic as the winner in many respects. It currently outspends the US in research and development. It has shown the effectiveness of its government, despite potential underlying fragility, mean that it has leapfrogged the West in many ways across a number of critical subsectors. Where there is still a significant gap is in the level of financialization of capital markets in the US versus China. The second area is the degree of government intervention. In order to manage the $66 trillion worth of debt, of sovereign debt that governments have now taken on, central banks will have to use financial repression to keep interest rates and the cost of that debt burden, the interest cost of that burden low. So everything we've run through, I think, highlight the opportunities on the equity long-short side of things, and we definitely favor those strategies. I would also highlight the opportunity between equity and credit. So clearly, capital structures will need to adapt. Businesses will need to adapt to this environment. Overall, I would say the macro managers that we have face a higher level of opportunity on the back of the greater level of regional and sectoral divergences that have come out of this crisis.